We are back with another weekly Forex forecast. Welcome everybody. I am FX Telepath. I have been trading for over 6 years, so you guys are in the right place. We will be doing a full top-down approach here on the US dollar. On the weekly time frame, you can see we have a weekly demand in control. We will show you guys that weekly demand from back here. It is kind of an older zone, but more importantly, these black dotted lines you see here, this is monthly demand. So what that means is we have a macro time frame demand zone in control, and that's why we've seen the dollar fail to break these zones multiple times as we've come in and tested that zone multiple times. And that is also why I think in the long run, and the next, maybe the next year, we could be actually headed up to weekly supply. Obviously, we're going to go down to the lower time frames here because it's difficult to read the price on just on the weekly time frame. I've been talking about this daily demand for so long now. I've had it on my charts since it removed this supply zone. You can go back and confirm by watching my previous forecast to see that I've had the zone on my charts, and I was calling this reaction off of this zone. We actually came back in for a second test. Definitely not a very bullish sign on the dollar, I will admit, but based off of this daily candle here, it's a pretty bullish sign. I mean, obviously we have shot up to the upside here. Is this zone going to hold? That's the big question. I personally don't like to trade at tested zones, but we have seen tested zones work multiple times, just like we saw in that weekly demand we were just discussing. So what we're going to watch out for this week, a couple things. First thing we're going to watch out for is this 1 hour time frame. You can see breaking this trend line, breaking this opposing area of demand, it left us with two areas of supply on the 1 hour chart. The one is at 98.39, the other one is at 98.77. I think once we hit this supply, again, the daily demand's in control. Daily demand is much stronger than 1 hour supply, but it doesn't mean we won't see somewhat of a reaction off of this supply before we end up breaking it. I will admit, since it is a second touch of the daily demand, it is a weak factor in this whole equation, but we have to go with what we have, and I am thinking this supply is going to be removed, but not before we see a small move off of that zone, and I can say the same thing for the supply zone above. So I think we could see a small move off the zone, but if we break it, that's definitely going to be a bullish sign. So that's what I'm going to be watching out for this week on the DXY. And the next thing is this 4 hour downward trend line. We are very overextended. We are pretty much sitting at the bottom end of this entire channel here. But if we pull up, if we break the 4 hour downward trend line there, that's going to be our most bullish sign on the dollar. And then obviously if we get some sort of trend line here, that's going to be the ultimate bullish sign to tell us that that daily demand is in control. Moving on to the forecast for the euro US dollar. Starting with the daily time frame here, you can see looks like we bottomed out here on the euro. I'm not going to be super bullish on the euro until we can break that supply, or sorry, this high. If we break that high, we will have a very nice trend line here, and at that point, I will have to hold off on my US dollar bullish bias and switch to a euro bullish bias, because this will be a very sustainable upward trend line that we can look to trade with. So just wanted to show you guys this daily time frame here first. As far as trading it goes now in the euro, not much going on the 1 hour chart. I drew this zone, got a nice move off of that demand zone there, but if we come back for a second test, it's definitely not a zone I'd be trading. So I would probably ignore that one, but we're going to keep it on our charts to see if there's a supply zone that removed it, and I'll have that zone on the charts for the Discord members. If you look, the only setup I'm really seeing right now, well, there's actually two. If you can see here, we have two areas of demand on the 4 hour chart. We had a nice 4 hour downward trend line. That downward trend line was removed by this area of demand at 116. But what do you notice? There's a much better area of demand down below at 115 on the 4 hour time frame. This demand zone from back here was responsible for removing, first of all, a targeted liquidity, and it removed a pretty good area of supply. So just full transparency, I also had the supply zone on my chart, and that zone broke with pretty much no issue. So not trying to say we're 100% win right here, not at all. This is a supply zone that I had on my chart, and it was removed by this area of demand. And I mean, this is a very good demand zone. Little hidden rally base rally, green candle basing, one of my favorite zones. Remove supply, targeted liquidity. The move away is so good, and that's why I think out of these two zones, this is the much preferred long setup. Again, since we are bullish on the dollar, whether you trade this zone or this zone, we have to be aggressive with trade management, meaning look for a 1-to-1, 2-to-1, move your stop to break even as soon as you can. This zone, however, is very mediocre. As far as my rules, which I'm not going to get into here, this zone just barely qualifies. So what do we do in this instance? Well, I'm a swing trader, so that means I enter on a 4-hour or on a 1-hour chart. If you're a day trader, you're in luck, because when this zone is hit, you could look for confirmation trades on a 15-minute time frame, which means wait for the zone to be hit, and maybe there will be a 15-minute demand zone here that we can get in long to confirm our entry, since this zone is pretty weak. But I will admit that this zone down below is good for a set and forget trade. But again, 1-to-1, 1-to-2 max, move your stop to break even. If we get a 1-to-1 move, take 80% of your trade off. If we get that 1-to-1 move, because we don't want to get greedy, I think we will ultimately see it break, not before we make a little bit of profit first. So to summarize again, this is our 4-hour demand zone for confirmation trades on a 15-minute time frame. And when this zone is contacted, I will be going over the 15-minute confirmation for the Diamond members in the Discord group. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session, where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group, where I answer all of your trading related questions, and finally the Sunday live stream forecast, where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. Moving on to the forecast for gold, there's not a whole lot going on gold right now. Weekly chart, obviously it looks pretty bullish. The daily chart's very sideways. I do have a downward arrow here. I'm actually going to remove that now. Based off of this kind of move here, it's just really sideways. So there's really not much to go off of on our higher time frames here. Even on the 4-hour chart, top right screen, not really much going on. No trend lines, nothing. But the 1-hour chart is quite promising. We do have a 1-hour supply zone above. It is a nice drop, base, drop with an explosive move away. We had liquidity here. We targeted that liquidity, and our entry was just missed here. Very unfortunate. One of the Discord members asked me, what do I think about this situation here, Kevin? And I'll be honest with you, it is a very tricky situation. I've been telling the members in my group, if you're going to trade gold, whether it's long, whether you're getting in long, whether you're getting in short, due to the market conditions, due to the world events going on right now, you don't want to be getting greedy. You don't want to be looking for a 5-to-1 trade off of a gold zone right now, because gold has been going up and then down. And it's just been absolutely crazy. So whatever you do, whether you're getting in long, getting in short, aggressive trade management definitely needed. I don't love when we come that close to hitting a zone, but I mean, I have seen many times where we will still see a move off of that zone. And I still think there will be a little bit of liquidity here to target. So this is our supply zone for a short trade at 46.63. Aggressive trade management definitely needed. That is if you're bearish. If you are bullish on gold, this is how I would be viewing it. One, we have a nice 1-hour trend line to the upside. We will throw a channel tool on this trend line to determine where we are at, and we are actually sitting below the 50% mark, which is perfect for day trading longs. So as long as we're below the 50% mark and above the upper trend line anywhere in this area, that means that 5-minute time frame longs are good. And what I mean by that is, if you trade demand zones, look for demand zones. If you trade support and resistance, look for support. If you trade patterns, look for bullish patterns. You don't want to be shorting with an upward trend line. So anywhere in this area is going to be good for 5-minute time frame long. So monitor this trend line, monitor the channel. That is going to be very important. Another option for longs is to simply wait for this supply to be removed, and then any demand zone there I will have on the charts for the Discord members, and we will see maybe a nice move off of a zone there. So those are our two options for if you are bullish on gold. All right, moving on to the forecast for the S&P 500, but really quick, as many of you know, we do donations on my channel to my local hospice charity with all of the ad revenue donated from these weekly Forex forecasts. So much appreciated. Just did another donation. The ad revenue has been decreasing lately, but we're still going to be donating. So much appreciated. Make sure you hit that like button and subscribe to the channel so we can continue to donate. Much appreciated. As far as a weekly chart goes here on the S&P 500, something very important happened where we created a beautiful weekly trend to the upside. Not only that, we have two somewhat decent weekly zones. I don't want to say amazing zones, but on the S&P, there are pretty good zones. So we have a lot of backstop support here if we do see some crashes. And these areas are going to be great dip buying opportunities for swing trading and for long-term investing. If you want to invest long-term, I know this is a trading channel, but you know, these areas on the weekly charts are great dip buying opportunities if you are looking to invest. But more importantly, beautiful weekly trend line to the upside. That is what I look to see a trend if it's able to be sustainable or not. As far as trading it goes now, it's very straightforward. On the 4-hour chart, we have a pretty nice 4-hour upward trend line. This 4-hour trend line is somewhat overextended right now. We'll draw it like this channel here. Actually, no, we'll draw it like this, my bad. So it's somewhat overextended as far as it looked, but when we throw a channel tool on it here, we're actually sitting below the 50% mark. So if you're a day trader, 15-minute time frame longs are good, below the 50% mark and above the trend line. We're at a decent point to do so right now. So that's what I'd be doing if you are a day trader. The other option we have is over on the 1-hour chart. You can see we had an all-time high over here. That all-time high was removed by this beautiful base rally. The basing's good, 2 basing candles, followed by an explosive move away and a nice continuation to the upside at 71.82. So if you're a swing trader on the 1-hour chart, this is our 1-hour demand zone for a pullback entry long. I like the location of it too. It's not right at the all-time high. Somewhat of a wide stop here could be worth it as well, just to kind of play it safe, especially since we have so much profit margin to the upside. I mean, if we throw a channel tool, or if we throw the risk to reward tool on this zone, you can see even if we had a wide stop and we target the high, it's a nice 3-to-1 trade, right? So it's really promising in my opinion. And look, guys, we're not going to act like we're 100% win right here. This trade could easily blast through, especially in these market conditions. So, but we have to go with what we have. We have trends to the upside, 1-hour zone forming. That is our pullback entry for a long trade, 71.83. And if you're a day trader, you don't feel comfortable just an entry, stop loss, take profit, that's fine. Wait for the zone to be hit and then switch to your 5-minute time frame and look for 5-minute time frame longs instead of that 1-hour demand zone. All right, moving on to the USDJPY forecast. These yen pairs have took an absolute beating here at the end of the week. But more, I mean, it definitely looks bearish, but I mean, zoom out, look at the weekly time frame. We have a weekly upward trend line that is being beautifully respected. I'll show you why this was respected as well here in a second. But beautiful weekly trend line being respected. We definitely are expecting to see the USDJPY continue to the upside. Another reason that we are seeing the trend line be respected is that it lined up perfectly with a demand zone. You can go back, watch my previous forecast, even last week, I've had the zone on my charts since it removed the supply zone. So no hindsight here, no fake P&L, none of that crap. This is real charting. You can go back and confirm that I've had the zone on my charts, and that is why, in my opinion, we are seeing a move to the upside and why we have bottomed out here on the USDJPY. And I will be honest, when we get explosive, insane moves like this, they're not predictable, guys. Anybody who's saying they're predicting this with fundamentals, they're straight up lying. They are not. And I will also say that whenever we get big explosive moves like this, the chart becomes very, very difficult to trade because zones are just so far, from price, it makes it very, very tricky. So we also had the zone on our charts that was blasted through. So full transparency here on my channel, we had the zone, it was blasted through as if it wasn't even there. But again, very difficult to predict. This is just going to happen. If you struggle with dealing with that, you got to learn to get better at dealing with situations like this because it can happen. More importantly, we created a 4-hour supply zone above at 160. Makes me nervous because it was an emotional spike, but we could see a move off the zone. I'd be aggressive with trade management. Why? Because it was created from an emotional spike, because we have a weekly trend line that is in control, and we have a daily demand that is in control as well. So all signs are really pointing to the upside, but it doesn't mean we can't get a one-to-one trade off of the zone before it ends up breaking. There is money to be made here. That's one of the biggest things I've changed in my trading over the years, is understanding that we don't have to ignore these lower probability zones. We just have to be aggressive with trade management. More importantly, if we push up, break this supply, any demand zone there, that's going to be our preferred setup. So in my opinion, on the USDJPY, it's all revolving around this 4-hour supply right now. All right, moving on to the forecast for the GBPUSD. I'm not going to zoom into the weekly or the daily chart. I'm just going to show you guys this quick. It's just so sideways here on the weekly, and it's just so sideways here on the daily. But I will admit the daily momentum is definitely looking strong, just no trends as far as how I view it. On the 4-hour time frame, we do have a 4-hour trend to the upside, but no trend line. I'm not going to get into my rules here. This is just a forecast. I talk about my rules in the Discord group, but I'm not going to get into the rules here. But it is looking bullish, just no trend line. And we are clearly pulling back, and I think we will most likely pull back to this 1-hour area of demand that I'm going to show you guys here in a second. So if you're going to trade the GBPUSD, we have two options. One option if you're bullish, and another option if you're bearish. If you are bullish, we are simply going to wait for this 1-hour demand zone to be hit. That is our swing trade long opportunity at 1.35. I mean, the basing's pretty good. The move away is insanely good. Look at that explosive move away. That's what really signals a strong demand zone, an aggressive move away candle like that, one single candle. If you haven't watched my full course here on YouTube about supply and demand, you definitely got to check it out. I talk about the logic behind it. Not going to get into detail here. So if you're bullish, this is our swing trading long opportunity. If you don't feel comfortable with just an entry there, if you're a day trader, you could look for 5-minute time frame confirmation there. That's completely reasonable. If you're bearish, we want to wait for this zone to be removed. If it does, and any supply zone there, that's going to be our shorting opportunity. I'm not seeing any shorting opportunities until we can get that removed, until we can get a nice supply zone to short from. I'm not seeing anything right now for shorts, only really long opportunities. But again, since we are bullish on the dollar, don't be greedy here, right? I'm bullish on the dollar. Doesn't mean we can't make a quick one-to-one here. Don't be greedy, right? Wait for the zone to be hit. If we get a nice move, think about taking 75, 80% of your trade off here. If you get a one-to-one move, or at least move your stop to break even and maybe get a break even trade, whatever, I'm not going to get greedy at this zone. All right, moving on to the forecast for the USDCAD. We are coming back in for like I don't even know. Let's count how many tests we've had the zone. So the zone was formed back here. 1, 2, 3, 4, 5, 6. This is the 7th test of this area of demand on the weekly chart. I'm not saying it's going to hold, but it's very possible it does. It's very possible we pull up to either one of these supply zones. I'm just not going to, it's not going to be on my, like, it's not like I'm saying, oh, we can't short at all because of this weekly demand. I don't, it's not really on my radar. That's not really worrying me for potential short trades. On the daily chart, kind of the same situation where we are coming back in for a third test. The zone was created on the daily chart. 1, 2, this will be the third test if we can hit this daily demand zone. Nothing really to go off of here, just really sideways, and that's just, it's very difficult to trade in these conditions. On the 1-hour chart, we got a beautiful 1-hour supply zone trade right there. I personally did not take this trade for reasons I'm not going to get into, but I was calling out this trade before it took place, like you can see on the screen now, in the daily market breakdown videos, and one of the members in our Discord group actually caught a beautiful trade off of the zone. Unfortunately, didn't get the whole thing, but that's okay. You can't always be getting greedy. But this trade was called out before in the daily market breakdown video for the Diamond members. So as far as trading the USDCAD goes, we really only have a couple of options. So you can see we have a very nice 4-hour downward trend line here. Let's throw a channel tool on it, and we will see if we are overextended or not. Let's take a look. So you can see we are below the 50% mark, which is not great for shorting. It kind of means we're chasing price if we are shorting. So if we push above the 50% mark and this trend line is holding, that is our area for day trading short on a 15-minute time frame. If you are not a day trader, we have two options. One option if you're bearish, and one option if you are bullish. If you're bearish and you're a swing trader, that's our supply zone for a short trade at 1.36. Remember that weekly demand I was telling you about that's in control? I'm not saying it's going to hold, but since it is in control, you don't want to be getting greedy with a trade like this. 1-to-1, 2-to-1 max, aggressive trade management definitely needed. If you're a swing trader and you're bullish, we are simply going to wait for either the downward trend line or this supply zone to be removed. The preferred move would be something like this, to see both of them removed. And if there's a demand zone there, that's going to be our high probability long trading setup here on the USDCAD. All right, moving on to the forecast for the Aussie US dollar. So you can see weekly trend line to the upside, definitely more sustainable in my opinion. If this trend line's hold, we could expect price to continue to go up on the Aussie. But again, we are bullish the dollar, so it's kind of tricky to be trading this right now. Daily trend to the upside as well. Very old supply zone in control. Nothing that really stands out to me. If we break this supply, it's going to be a pretty bullish sign, especially since we've seen a few moves off of this supply level. As far as trading the Aussie goes now, we actually created a 4-hour trend line to the upside. 4-hour trend, rather, my bad. So 4-hour trend to the upside by breaking that high. I'm not going to draw a trend line here. This chart's looking very similar to the pound. You can go to the pound. It's very, very similar looking. No trend line, which makes me kind of weary about this one. I don't know how sustainable this trend is really going to be. If we do pull back, there's a nice little hidden rally-based rally here. It's pretty good. I like the support trap. These purple zones are support. So I would like to see, the zone's kind of old. So when it's old like this, I like to see a move off of the support, proving there is liquidity here with stop losses. Then I think this demand zone will be good for a long trade, even better if we do get a reaction off of that support liquidity. But again, it's so old, we want to be aggressive with trade management, meaning don't look for a 5-to-1 off this trade. Don't be greedy, guys. There's a time to be greedy, and there's a time not to be. And honestly, most of the time, it's not a time to be greedy, if I'm being quite honest with you guys. On the 1-hour chart, we have a level on top of level here. I know this is a very confusing situation for a lot of people, and I totally understand. We have zone number 1 and zone number 2. Zone number 1 removed the demand zone. So this zone zone number 1 right here removed the supply, and zone number 2 removed the downward trend line. So the big question, which zone do we trade? A lot of people think the zones that are lower are better because it's just a lower price. It's a better bargain, whatever you want to call it. Me personally, I actually think this zone is better. Another option is to just take both, right? Let's say you look for 3-to-1, 2-to-1 risk reward. If you take a loss on both, you're down 2%. And then maybe you get a nice trade off of another zone on another chart, and now you're back to break even. Big deal. Let's say you want to, I don't know, so I'm just saying there's so many options here. You can trade both, let your risk reward play out in the long run. You can pick one. And if I was going to pick a zone here, it would be this one. This one's just, I don't know, it just makes me a little bit nervous based on my experience. I guess it's hard for me to explain, I will admit, but that is our preferred setup at 0.71. If it breaks, we could see a move off of that zone as well. Another option is to, if you want to trade both, considering that this zone is a better bargain, whatever you want to call it, you could just look for aggressive trade management off of that zone, meaning look for 1-to-1, and then look for the bigger move off the one lower. I do recommend aggressive trade management on both, especially considering we are bullish on the dollar. But those are our 2 demand zones for the Aussie, and if we break these zones, any supply zone that breaks them, it's going to be a pretty good zone. So that's something we'll be waiting for as well on the Aussie. Moving on to the forecast for the USD Swiss. I've been talking about this weekly supply and control for quite a while now. But when we zoom out, look how overextended we are. So it wouldn't surprise me to see this thing really shoot off in the next year or two, just based off of the pure concept of overextended. On the daily chart here, we created a pretty nice peak. If we can break this low, we will actually have a pretty nice daily downward trend line here. That's going to be a bearish sign, but I think it could be short-lived because we do have a daily demand down below at 0.77. So if you're a swing trader, I would wait for this daily demand zone to be hit. This is going to be our higher odds situation. Wait for the daily demand to be hit. Then we could start to look for longs confirmation on an H1 time frame. As a swing trader, I'm really looking forward to this daily demand zone being hit. That's what I would love to see. As far as trading the USD Swiss goes now, we really have, the daily chart is an option as well. We have 2 options here on the 4-hour chart. We had an upward trend line. That trend line was very cleanly removed by this supply. Remember, this supply was created from an emotional spike, so it does make me a little bit nervous. And we are bullish in the dollar, so if you are going to trade this zone, you just got to be aggressive with trade management. Don't get greedy. If we break the supply, any demand there could be good for a long trade, but we also have a very good supply zone above at 0.79 that I think we could see a move off of as well. So a couple 4-hour zones here. Hopefully this all makes sense. Any questions, guys, leave a comment. I literally respond to every single comment. I never miss one unless it just happens to just not show up on my YouTube studio. I always respond to the comments, so don't be scared to ask questions. There are no dumb questions. Moving on to the forecast for crude oil, guys. And look, I'll be straight up with you. Very tricky weekly and daily chart, all over the place. And let me make one thing very clear. Whether you are looking for longs, whether you are looking for shorts, aggressive trade management all around, due to the nature of the markets right now, on oil, it's just not one you want to be holding long term. Okay, let me make that very, very, very clear. That's all part of trading psychology. And if you need help with that, check out my Stoic Trading Psychology podcast. It is available anywhere you get your podcast. Also have a YouTube channel for it as well. So if you struggle with psychology, that podcast will 100% help you. As far as trading oil goes now, I'm really only seeing one trading setup, and that is on the 4-hour chart. We have a 4-hour supply. It broke a trend line. More importantly, we're actually basing out before it, and I like the distance from the zone. I like the basing out. It basically is saying there's resistance here, so another reaction off of this resistance would really prove there are stop losses here. Targeting those stop losses, hitting our supply zone would be good for a trade at 114.78. It's not necessary to see another reaction off of it. I still think it's a good trade even if you just blast right through it. But again, aggressive trade management definitely needed here on crude oil. All right, on to Bitcoin. Last but certainly not least, we have a monthly demand and control. I've been talking about this for a while, and that's why we have seen Bitcoin bottom out. Feel free to go back and watch my previous forecasts on YouTube. I never delete them. That's why they're there. You can go back and confirm. I've been talking about this move to the upside now, and we are seeing just that. We have a weekly supply above, and I think that's where we could be headed, especially since we have a new daily trend line to the upside. Very nice trend line. It is a little overextended though, I believe. Let's throw a channel tool on it. Yeah, so we are sitting above the 50% mark, hovering in between the 50% mark and the upper end of that channel. So we are a little overextended, which makes me a little bit nervous about getting in long. And to be honest, I'm not seeing any long setups right now. 1-hour chart is not showing anything. However, on the 4-hour chart, we had a beautiful 4-hour trend line to the upside. The 4-hour trend line was removed by this supply. We'll zoom into the supply. It's not amazing. The initial move away is great, but I don't like that we hovered around it here right after. But I mean, we can't deny we are seeing a move off this zone pretty well. And again, I drew the zone before it took place. No hindsight here. Nice move off the zone so far. So if you're a day trader trading Bitcoin, as long as the supply is holding, you could justify 15-minute time frame shorts. If you were bullish on Bitcoin, we actually have two options. If we remove that supply, any demand there is going to be a pretty nice trading setup. Or if you go back here, it is an older zone, so that makes me nervous. But if we can see a reaction off of this support, we have a nice little hidden demand zone down below. I think we could see a move off of that demand at 69,000. And look, typically with older zones, you want to be aggressive with trade management, meaning get out on a 1-to-1, whatever. But we have monthly demand and control. So this is actually an opportunity for a pretty nice swing trading long for a larger risk reward. That is our preferred long setup on the Bitcoin chart. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.